All right, hello everyone. We're here today for our very first lecture. I do have a couple of things that I want to make announcements about. First of all, Kyle, how do I feel about Wednesdays?
You don't like Wednesdays.
I don't like Wednesdays. So you hear me whine about Wednesdays. So my philosophy about Wednesdays is that it's the furthest point between two weekends. You know, everybody says Monday's the worst, but you're right after a weekend on a Monday, so you're energized and you're ready to go. Friday, the weekend is coming up. You're just ready for that. Wednesday, like there's the hope has been abandoned from the previous weekend. There's very little hope in sight for the coming weekend. So if you see me griping about Wednesdays, I'm a big detractor of Wednesdays. That being said, I do try to still bring my energy and enthusiasm on the day, but Wednesdays are going to be those days you're going to be watching us. Dark Barnes in the mood, and the answer is almost always yes. So I believe most everybody in the class has completed the quiz, the beginning of semester questionnaire. If you have not, please do so. I will start reaching out to you probably Friday, start talking to you about some of the inputs you had, but please complete those. Remember, that is your substantive interaction for this course. If you don't complete that, then I'm going to assume that you're not engaged in the course and drop you. Well, that's not true. That's what the policy says we're supposed to do. I will probably reach out and say, hey, are you going to complete the quiz or not? And you'll say, oh, sorry about that, Dr. Barnes. Or you say, yeah, I'm dropping your course. I'm just not into this whole AIS thing, which I get that. Yeah, I get that. Yeah, anything that begins with accounting, you got this. It's a little bit sus, to be honest. I do want to start this around, so I'm going to send around the sheet. This is basically a seating chart for this room. You are not required to sit in the spots that you're at right now. I just want to get an idea of where people are sitting so I can do a little bit better job of putting names to faces. If you get on the move, that's fine. I'll adjust. Just for context, that poll that was sent out, that was sent at the end of class, 54% of the class said that they would like to be in this room. 30% said they have no preference whatsoever, and about 15% said they'd like to be in a different room. So those three of you who said that you'd like to be in a different room, I'm sorry that you got overridden by the rest of the class. We will be in here. I want to reiterate the point that I have no problem with being here. I will do my best on lectures, but please do your best to make sure you're engaged during the lectures. If you're staring at the computer screen and not engaging with me, it's going to be very, very challenging to learn the material. I do like to think what I have to say has some value, and I try to put much effort into making the lectures energized and effective. I fully encourage you to take detailed notes and diligent notes as we're going through the lectures, but if I'm speaking the entire time and I see that your eyes are on the computer screen and not at me the entire time, or worse yet, I don't see your eyes at all because your computer screen is right up here, it's a little bit disheartening. Okay, it's a little bit discouraging. So, like I said, these may be the days, some of those lecture days, that you need that extra little bit of caffeine to try to keep your engagement levels up. But I'll try to do my part as long as you guys try to do your part. And if we need to start a fund so that we can actually have a fund for Red Bull in the class, then let me know. We'll start working on that one. There's a lot of Red Bull jokes in this class, but we'll get to that as we move forward. All right, today we are going to start out with our beginning. We're going to talk about what is the nature of accounting information systems. And I've looked over a few of the quizzes, and a few of the quizzes were pretty straightforward. A lot of people said this is just learning how to do what computers does accounting, and that's somewhat correct. For those of you who said accounting with killer robots, thank you very much. I appreciate that. Okay, try to amp up the enthusiasm, but for the most part, we need to be able to define what accounting information systems are and how they fit into the whole. And it's easy to say that we're just going to take 220 and 221 and computerize them. That is not a misstatement of the nature of this class. However, it is a little bit more involved and detailed than that. We need to be able to understand not just how accounting information systems relate to what you learned in your previous accounting courses, but also how they relate to everything else that you're learning as part of the business major here at Truman State. All right. And it's my assumption that there's a lot of accounting students in this class, but there's a lot of people who are not accounting students, and that's great. It's encouraging to hear people who want to learn more about how everything integrates together. It is very, very difficult to have a standalone discipline and be effective. To be a good accountant, you need to know finance. To be a good marketing major, you need to know management. To be a good finance major, you need to know all the disciplines. It's true. This is all fairly holistic. It all works together. So that is kind of the goal of today's lecture, is to see not just what is an accounting information system by definition, but how it relates to everything else that you're going to learn. And one point that you've learned about accounting that you're already familiar with, it is about analysis of financial statement information. What entails that account, the financial statement information, all the transactions that you learn how to, those journal entries and those T accounts. Remember T accounts? Everybody love T accounts? No? Okay, yeah. I'm right there with you. The good news is we're not going to do T accounts in this course. T accounts are shorthand for ledger entries. We're actually going to go directly to ledger and see what that looks like. And so I do think T accounts are important, but that's just a visual tool for what the actual operation is within a computer system. So let's go ahead and get started. The very first thing that I start out with, and this is a bit snarky, I will admit it, but I do think it's important. There are 3 letters in accounting, or AIS, accounting information systems. So we want to define what accounting information system is. So let's start out with the basic concept of a system. So if I said, can you define the word system? How many people think that you come up with a pretty good definition? I think most very well-educated people here think you could come up with something like that, and I would agree. Yeah, it really would depend. It really says, what do you mean by system, Dr. Barnes? And that is probably the correct answer for every question I will ever ask. Okay. Now, I'm not going to say that you can get away with this on the exam, and because the accounting default question, if I ever ask you a question in this class and you're just like, I have no idea, what you should do, you should stop, you should nod your head and put your chin in your hand, says, it depends, Dr. Barnes. Okay. And that is always going to be a correct answer. All right. You do not get away with that on the exams, by the way. Okay. You can't actually mark E. It depends. All right. But technically speaking, we could always talk about that. And it's true for this definition here. So let's talk about what we mean by a system, because a system can mean different things to different people. So first definition of a system, a regularly interacting independent group of items forming a unified whole. So if we think about a system, oftentimes we think about like technological items or technology. We could think about like a clock. We think about the gears turning in a clock and how that works. That's effectively a system. Or a computer. A computer is a little bit more of an advanced technology system, but holds the same principles in check. And I will say that this is an accurate definition when we start getting an accounting information system. It's incomplete, but it is accurate. So it is necessary, but not sufficient. And so that's important to note. So yeah, I think this is kind of where we would default when we start talking about a system. We'd say a system is basically how everything interacts to accomplish a certain purpose. And that's effectively what a clock or a computer does, depending on the purpose that we define for it. But let's go a little bit beyond that. Let's go a little bit beyond that definition. Second definition is going to be an organized or established procedure. All right. It's like it is a system. It's something that you follow. Many people who are like, if you're a student athlete, you probably have a system or a regimen that you follow pretty regularly of what you eat, when you train, what it is that you do, the schedule that you follow. That could be defined as a system as well. Now you notice up here, I've got this thing that says Facts of Life. Has anybody ever heard of the TV show Facts of Life? I have taught this class now for 6 semesters. I have 0 people who have actually heard of this TV show, which shows how old I am. So this was actually a TV show from the 1980s. It was fairly well known at the time. It was very, very heavily on reruns. And I'm not going to tell you all about the TV show. The only reason I bring this up is because one of my memories of this TV show from when I was growing up is there was this. So the context of the TV show was actually about a group of young ladies that all lived together. At first, it was in a high school, a private high school, but then later on they went on to and they were living together in a college dormitory. But talked about their life and their circumstances, and it was pretty regular on the afternoons of the reruns, along with like Different Strokes and some of the other TV shows that were popular in the 1980s. Brady Bunch was also really popular. Have you ever heard of Brady Bunch? Yeah, see that one's, that was kind of common. That one's a little bit earlier. That was actually late 60s, early 70s, but Facts of Life was early 80s. So one of the young ladies actually went out on a date with a very handsome young man. And she was just really excited about this. And this man was definitely very, very attractive, but he also was not very bright. And so the reason I bring this up is he had this saying that he said is he basically everything that he did, he concluded the statement with, it's my system. It really works for me. So one of the statements was, it's like, whenever I go to a restaurant, I fill up on the salad bar and bread, and then I take my meal with me to go to go container so I can have it later. It's my system. It really works for me. And I said, well, good for that guy. You know, it was obviously we're trying to tease somebody for not being very bright, which I don't know that would actually go in today's generation, but I do think that that's actually the implementation of a system from this perspective. It's a procedure that he follows, and it really worked for him. So that's kind of how we can think about a system as well. Final system. This is the one, again, this is the one that's a little bit more snarky, okay? An organized set of doctrines, ideas, or principles usually intended to explain the arrangement of a working or systematic whole, all right? So we talk about the system is basically the system itself is the noun. All right, this is the system that we follow, and if you've ever heard kind of a conspiracy theory or conspiracy doctrine, just say the system is working against you or you're trying it, or if you follow Andy Samberg and Lonely Island from early 2010s on Saturday Night Live, you can't trust the system, all right? Which that one's a little bit more relevant. Is anybody familiar with Andy Samberg? Okay, that's where I'm going to be really, really concerned is if I say, who's this person on the slide right here? It says, we have no idea, Dr. Barnes. Live in the now, okay? Okay, let's say I apologize. I've got like 50 years of trivia that I've got to share, and some of it's going to hit and some of it's going to miss. But yeah, you can't trust the system. The system, by that definition, is kind of the doctrines and the dogma that actually everybody follows. And again, could be appropriate for this situation, but I think it's less so, even though we can find some nuances that are going to be relevant. The problem with this is that this is actually using the term system by itself, and system by itself is not very meaningful to us. What we really need is we need to expand our definition, and we could define every single word individually, but I don't think that that's going to be as effective as trying to define each of the terms in context to one another. So let's expand our definition. Let's move on to information system, and this is a little bit more relevant. This is where we're actually going to start seeing some attractive value here. So an information system is an integrated set of components for collecting, storing, and processing data, and for providing information, knowledge, and digital products. And when I looked up information system, when I did my Google search on this, this was one of the images that came up. You don't really need to know too much about this image right here. We will actually see variants of this image right here. But basically what we're going to determine is that an information system is going to detail information depending on the level that you operate at. So if we're talking about people who are working on the line, they're more focused on very, very specific details about day-to-day operations. We're talking about executives, they're more about strategy. They're about big picture initiatives. The system has to be able to provide both of those. The information system has to be able to provide information that's at every single level within the organization is what this image is talking about. But again, do not need to memorize that. I think it might be difficult because some of it's blurry because I just copied it off Google. But I do think that this definition of information system has some value. So let's do one thing real quick. Let's go ahead and split this definition in half, okay? What I want to do is I want to cut this definition in half, all right? So an integrated set of components for collecting, storing, and processing data. What does that sound like to you? What is the data when it's in this form what it's going to take? Has everybody heard of the term input? Yeah, this is basically input, information that's flowing into the system. Now, that's a misnomer. I shouldn't say information that's flowing in the system, but data is flowing in the system. I'll talk about that in a second. I tend to do that a lot, and I don't mean to, and I try to correct myself whenever I can. But data flowing into the system, presumably speaking, if we take that data, we transform it, then it's going to be output, okay? So our definition of information system is basically managing input and managing output, okay? Does that necessarily mean that we're talking about a computerized system? It could be, but is it limited to just a computerized system? Can anybody in this room manage input and output without a computer? So if I give you what's your name? And I say, Michael Barnes, okay? I took in a piece of input and I provided a piece of output, all right? Didn't require a computer to do it, at least not yet, okay? I'm getting much older. Someday I may get to the point where I have to say, let me look that up on my phone. I am Michael Barnes. Okay, there we go, all right? We're not quite there yet, but for the most part, everybody in this room can manage input and output without necessarily having to have a computerized system. All right. So this makes things easy, all right? So accounting information system, we're just going to use our definition and add accounting to it. There we go. We're done here for today. Have a great day. I'm just joking, just joking. It would be fun if we could actually just do that. If we could just say accounting data, accounting information, but unfortunately, that's not quite as simple. So accounting information system, this definition is not sufficient to the task, all right? So to understand accounting information systems as a whole, let's go ahead and talk about the role of the accountant. And what is the role of an accountant? Well, if you're an accounting major, you're probably just like saying we're supermen, okay? We're superheroes. And those of you who are not accounting majors says, I just don't care, Dr. Barnes. Okay, it's a kind of ancillary to my task. What I do is important. What accountants do is they support my task. And you're not wrong, okay? You're not wrong, okay? But I do think it's kind of funny because has anybody heard kind of this analogy used for accountants, the bean counters? Heard that term before? Yeah, this is actually very appropriate. If you go back like 50 years in accounting, before we actually had heavy utilization of computerized systems, a lot of accountants legitimately did things like this. Now, they weren't sitting there counting beans. That's ridiculous, okay? But it's intentionally ridiculous. But a lot of times, it was a focus on computation. We would take documents, we would add them all together, and once all the documents are added together, does this match the account balance that the client has? That was an audit function right there. So those of you who are going to take auditing with me in a semester or two, you're going to hear me talking about that. That is no longer what we do. We don't sit there with invoices and say, adding machine, adding machine, adding, I must have a typo somewhere. This number doesn't match. Okay. It's not what we do. We have computers to do that for us. But that is kind of a characterization of what accountants did in the past. So let's go ahead and go in a little more detail about modern day accounting and what modern day accounting. And I will tell you that the slide I'm about to show you is not comprehensive by any means. And I would say that it's probably somewhat outdated because we've got a lot more new technology tools. Okay. I try to update this over time, but I'm going to try to speak generally about accounting. So identify, address business opportunities. All right. This is one of our most important roles, to understand what it is that the organization does and how we can actually contribute to the betterment of the organization in that regard. Decide on what information is needed. So keep in mind that the ultimate objective of the accounting classes which we were talking about, at least in 220, remember 220, we were talking about financial statements. And so what goes in the balance sheet and what goes in the income statement, that doesn't come out of the ether. We don't just create these statements and say, here we go, financial statements. We have to know what information goes into those financial statements. Now the transactions are easy, but are the financial statements solely just transactions? Did anybody have to do like a financial statement analysis project in one of their courses like 220 or 221? Did you ever look at those 10Ks? Okay. 10Ks are not just financial statements. They're also a lot of words, a lot of disclosures, a lot of ancillary documents that are associated with the financial statements. All that information, even though it's not financial, qualitative information can be relevant as well. So we have to identify what type of information can be associated there. We need to build the accounting information system, which is going to be one of our focuses in the task in this course is saying, how do we do that? We need to understand what role the accounting information systems play, then be able to analyze the information system, the accounting information system, or analyze the information in the AIS and provide helpful insights and management. So once we've got the AIS, we can look at it, we can determine what is happening within the organization based on the inputs and the outputs from the AIS, and we can tell management, this is the role you need to play. Now, to be fair, you've already done that to some degree. I'm going to harken back to this example a lot in this course, but because it's a very tangible and easy to understand example. So 221, chapter, it used to be chapter 23. I don't know what chapter it is now because Dr. Otero changed textbooks, gone her, but, do you remember variance analysis from 221? Okay. Now, I meant to mention that and some people are just kind of like, gosh, you're talking about this. We're not doing variance analysis in this course, so calm down, calm down. We're not going to make you get calculus inputs. But remember, variance analysis was a really, really challenging task because you had to have the standard cost and you had to have the actual cost and had to know how the formulas work and then you calculate those. Was the whole goal of variance analysis just to make you learn formulas? It may have seemed like that in 221. You may have said, okay, I'm learning this formula. I've got this formula memorized. I'm pretty confident I can do this on the exam. Great. That sounded great, but that's not the goal of variance analysis. What was the goal of variance analysis? So look and see those unfavorable variances and those favorable variances and determine how much do they differ from what your expectations are, okay? So if you have something that's unfavorable, you might say, well, it looks like our costs in this area are extremely high and we want to know why those costs are high. So that's something to investigate. If it's a favorable variance, you might say, all right, how do we get such a favorable labor variance? Are you hiring people that are under what they should be utilized at? Those are questions that we had to ask for both of those. It was not about the data itself or the information itself. It's about what you can utilize that information for. And that's our ultimate goal, is to actually take that information and put it to value for the organization. And because, by the way, you will notice on some of these slides, I make the joke that I teach via memes. I hate empty slide space on there. So if I have like empty slide space, I'll try to throw in this there. I really like this one. This is a big 4 accounting memes, like Luke the Jedi trying to learn principles of accounting. It's like, I want to learn. I want to be a Jedi like my father. And then Kylo Ren's like, I want to be free from this pain. And that's every other accounting class right there. So, take those principles classes, you're like so excited, you got stars in your eyes. And then you start getting to this class and say, okay, UML diagrams, I've had enough of this. I've had enough of this. Yeah. We will get there. We will get there. I mean, it's something to look forward to, I guess. But if you maintain this optimism for a long period of time, if you can maintain that, good for you. All right, that's the attitude that you want. It can be a challenge, though. It can be a challenge. All right. So based on that, let's go ahead and define our accounting information system. A system that records, processes, and reports on transactions to provide financial and non-financial information. I would argue that non-financial information is probably more important, or if it's not more important, it's going to supplement our financial information and provide context for it. So those 10Ks, they're not going anywhere because all of that information is relevant value. And the interesting thing is that's summarized information, that's summarized detail. That is not the entire organization. I know when you look at 10K, it's like, Dr. Barnes, this is 100 pages. Nobody reads this. Actually, there are people who read all of this and read many of those every single year. But it's summarized information. It is not the whole of the organization. It's a summary of what the organization has done over that period of time. Then we're going to use accounting information to aid in decision making. The way to think about this is the example that I just talked about, variance analysis. How can we use something like that to make better decisions? Well, if we're paying too much in a certain area, maybe we need to change suppliers. If we're not paying our workers enough, then we may have concerns that they may go off to a better job, so maybe we need to give them raises. Some concerns that we can ask, and we can look at the variances and come up with expectations and come up with analysis that's meaningful and valuable. All right. Finally, my favorite one, incorporate appropriate levels of internal controls, which we're going to define as security measures to prevent sensitive data for those transactions. So not only do we need to be able to aggregate and evaluate accounting information systems, but we need to provide necessary level of security over there. How many in this room have heard of the term internal controls before? Okay, you're going to get really, really accustomed and acclimated to that term because I'm going to talk about controls a lot, all right? The one thing I'd like you to write down now, because I will refer back to this term a lot in this course, when you hear the word control, I want you to think the following. A control is a response to a risk. The reason I mention this right now is because you're going to see a lot of complex terminology surrounding internal controls. It's not even going to be limited to this course. Those of you who move on to the higher level courses, you're going to hear that term used, and people are going to say it means something much more than it does. I want you to stop at the very basic level and say, an internal control is just a response to a risk. So we need to know what the risk is, and then we respond to it correctly. Now, I've got a very silly example, and you'll probably hear me use this example many times in this course and other courses. But my example for internal control is very basic. If I walk outside without any shoes on, I might hurt my feet, okay? And I'm really old, so I'm at much bigger risk than I used to be. Back when I was a kid, I ran outside, didn't care, okay? But I'm very, very careful. So what is a necessary control? Put shoes on, all right? Has anybody ever really thought about that? Shoes are internal controls. Yeah, it's kind of cool, huh? Or I've just ruined shoes for you forever. It's like, I don't want to go shoe shopping ever again now, Dr. Barnes. Thank you very much. Yeah. I've applied accounting to your shopping purchases, and yeah, now it's kind of like, look at these shoes, aren't they cool? Says no, they're controls. Yeah, that's what I do, guys. That's what I do. So yeah, we're going to talk a lot about controls because as we put information in aggregate into a system, there becomes a risk associated with that information. Okay, whether proper people are using that information or whether it could be exposed externally. How many people were here in spring of 2023? So I guess 2 years ago, okay? Does everybody remember how it happened at Truman State and the computer systems here at Truman State? Yeah, there was a big data breach. Actually, it was a ransomware attack, okay? Now, we'll talk about that also, but that's an example of the type of risk that an organization faces. And I will say that our controls architecture has changed substantially since that attack. So you've got that thing on your cell phone now that whenever you log into like an Outlook service that you have to go through dual authentication. Does anybody know that dual authentication doesn't work for anything less than iOS 17 now? That's a real pain because I've got an iPhone 10 which can't be upgraded to iOS 17, so I have to actually bypass the authentication and get logged in now. So that's I guess a first world problem, I suppose, but still it's a multi-factor authentication method, which adds another layer of security. So that's a control that we've implemented in response to that particular attack. We're going to go in depth on that one too, because that's going to relate to a lot of the cybersecurity concerns that we have with respect to information systems that are prevalent. All right. So with respect to an accounting information system, I want to talk about what it is that dictates our primary goal in accounting information system. And so I'm going to show you this thing right here. This is a slide on SFAC number 8, the conceptual framework for financial reporting. So SFAC is Statements on Financial Accounting Concepts. And this is number 8. And this is just a slide that summarizes everything that's in that concept. I don't want you to memorize all of this. I do think this is good knowledge to have, particularly if you're an accounting major. This is a good piece of information. But I'd like to focus on one area right here. When we talk about accounting information, we have something called a constraint. This is a pervasive constraint. It basically means that this is going to be a consideration that goes above all others. And you'll notice it has the word cost. In context, what do you think the word cost means with respect to this? If I say it's a pervasive constraint. Well, the answer is pretty simple. It's something that you probably employ in your own lives, whether you realize it or not. And that is that the cost of providing accounting information cannot exceed the benefit of providing that accounting information. Okay. So in other words, when you see the word cost, you probably should write this in. It says cost less than benefit. Cost less than benefit. Does that make sense to everyone? So when you go to the grocery store and you go and you say, you buy your, let's go bananas. Okay. So you go and buy bananas and you say, all right, what is the maximum amount I'd want to pay for bananas? And you say, I'd pay $2 per pound of bananas. And you go and you look and see the bananas are currently at $1.50 per pound. The cost of acquiring those bananas is less than what your perceived benefit of those bananas are. You would pay as much as $2 for that. If bananas cost $3 per pound, would you buy them? No. Okay. At least that's how rational humans would think. Rational, and that's not necessarily how I think. Some people just go in and say bananas. I want bananas. All right. All right. So I will be honest. That's the way I am with cheeseburgers. Okay. If it's the cheeseburgers on the menu, then it's like, okay, don't care what the cost is. That's going to be in my meal. Okay. That's something you guys should probably kind of acclimated to. I talk a lot about food, especially about cheeseburgers, and I will apologize to anybody who's vegetarian or vegan in the room. It's not meant to offend. That's just kind of who I am. It's who I am. Big cheeseburger fan. So yeah, back to this. Cost has to be less than the benefit, or the benefit of providing accounting information has to exceed its cost. That is our pervasive constraint, and that is critical for accounting information systems. There's stories about individuals. We're still in middle class. There's stories about individuals who have acquired accounting information systems for their organizations where what they acquired was much greater than what they needed. I don't remember what the name of the city was, but there was an example that I gave in my advanced accounting information systems class where there was a city about the size of Kirksville, it was 15,000 people. They bought $1 million IBM mainframe for their payroll system. Okay. I would hesitate to say that Kirksville needs anything like that. I could probably handle their payroll on my Excel file. $1 million mainframe system was way too much. That was an example of the cost greatly exceeding the benefit of providing that particular detail. Because not only did the system itself cost that, but you have to have the expertise associated with it. You have to have the power. You have to have the people who could actually run that. There's a lot of costs that would be incurred as a part of that. Greatly exceeded the benefit of providing information. All right. Now we're going to talk about something that I'm a little bit embarrassed about. Okay, we're going to talk about information generation. So, contrary to popular opinion, and occasionally the words that come out of my very own mouth, data is not the same thing as information. You will hear me make that mistake. I don't know why I make that mistake so consistently. But when we talk about data, data is going to be the raw, untransformed input. Information is our output. Okay, information has value. Data has value in the fact that it can become information. So if you can't transform data into anything meaningful, it doesn't have value. It only has value when it comes to information. How we actually characterize this is we identify our business need and business event. We gather data collectively associated with that. We transform that data into information. So how do we characterize this from something that you're already familiar with? We're going to go back to variance analysis. Take those standard costs. Take those standard quantities. Take the actual cost, actual quantities. Plug them into formulas. Those numbers that you've got, those are the data. And once you put them in the formulas and derive an output, that's information that you can utilize. That information provides knowledge and allows you to make better decisions associated with that. So even though this kind of looks like a whole bunch of gobbledygook, this like a whole bunch of arrows that somebody put together on a PowerPoint slide, and it is because I did that, I totally did that. There is a relevance, and it does apply to things that you've already done, and I would say that this applies to your data information transformations in everyday life. Okay, piece of data would be like looking at your phone and trying to determine what the weather is. And once you actually have that data piece, you can say, all right, what information does that tell me? If you see the number 1 with a circle up by it, it's like, okay, what does that mean? And here in the United States of America, that means it's really, really cold outside. Okay, so your information is it's cold outside. Probably want to wear a jacket. Okay, or like some of my students in the past, a pair of gym shorts. Okay, I hear me make that joke too. I've had students in the past who have shown up when it's single-degree temperatures and they're just wearing gym shorts. And I said, "What are you doing? Are you crazy?" He says, "I'm a college student." Yeah, so yeah. By the way, if you're one of those people who likes to wear gym shorts in cold weather, don't do it. Okay, I wish I could still get away with it. So yeah, can't quite do that anymore. All right. So what are some roles with respect to accounting information systems? So the first of all is going to be a designer. Now make a note of this. Make a note of this. we're going to be talking about the first two roles, designer and implementer. And these are people who are going to be overall responsible for the creation and update and maintenance of the system itself. So designing the system itself is going to be creating the system. Usually it's a one-time engagement where there's hands-off, sometimes monitoring that will improve the system over time. But for the most part, that's basically the just creation, overall creation. Then we have the implementer, the database administrator. And this is where I want to make the note. This is somebody who has responsibility for the system as a whole, but generally not responsible for transactional detail. This would be somebody who comes in and fixes the problems that the people who are responsible for day-to-day operations would fix. Why do I mention that? One of the very first things we're going to be doing, I think not next week, I think it's not until week 3. We're going to be doing this when we start week 3. We're going to be working in an AIS ERP system called NetSuite. And this will be your role as database administrator. But you're going to hear me talk about the fact that this is not something that we would normally have. This is not the role we would normally have. Somebody who's an administrator has access to everything in the system. Now, the reason that we take that role for that particular content or for that particular activity is because I want you to see the entire system. But in the real world, if you worked on NetSuite, your definition would probably be like salesperson, okay, or accounting clerk, payables clerk, or receiving clerk. You would have access to part of the system. It would be compartmentalized based on your role. So when we talk about the administrator, somebody has responsibility for the entire system, but mostly for maintenance purposes, not for transactional purposes. Then we have users who record transactions and events. This ultimately should be the role that we would take if we were being more meaningful. The problem with being a user in this system is that users are going to be constricted to the area they're defined. Sales, receivables, payables, they can only access certain parts of the system, which is why we don't do user transactions in NetSuite. And again, this seems like I'm splitting hairs. Like, why are you making such a big deal of this, Dr. Barnes? Because I want you to understand that the view that we will have in NetSuite is not the view that people have when they start working in the real world. We're going to be taking the administrator view. In the real world, you would have a user view. Then we have people who evaluate the system themselves. We have the auditors, okay? These are people who operate externally to determine if everything is working properly. From a technology perspective, we want to make sure that when an input goes in, that has consistent output. Usually the way an auditor would work is they would say, all right, you put this piece of input in and you got this result. Let me do the same thing and see if I get the same result. The answer is yes, the auditor is going to be thumbs up. The answer is no, the auditor is going to be thumbs down. And as you will find out, since I'm an auditor, thumbs down is not good, okay? That's a bad thing. Then we have the manager, who's the controller, CFO. This is basically the level at which we take the detail that comes from the system. It provides information and we make strategic decisions moving forward. All right. Now, this is going to be a very interesting dilemma because in the past, what you've thought about for accounting, at least from a 220 perspective, is that we're looking at historical information and using that to judge results. Now, you got a little bit of a differentiation from that when you took 221, because remember, cost accounting was forward-looking. For the most part, we're going to be thinking about both perspectives, but we're going to be thinking about both of them in how we actually make decisions moving forward. That's the manager role, so the controller and the CFO. We can also talk about the executives, but for the most part, we're going to be focused on the accounting perspective. All right, I'm going to run through this next part really quickly. I do want to clarify for this next part, I do think it's important to understand all these roles and the sequence. So please make sure to make note of this. I believe it's like the next 9 slides. Make sure you spend some time focused on this, because this absolutely will be something that's on the exam. I've tested on in the past. Even though I'm only going to spend probably like 5 minutes on it, I do think it's important to understand the sequence. The good news is most of it is fairly intuitive, all right? So let's talk about the firm value chain and how accounting information systems relate to that. So with respect to the value chain, we have 5 primary activities, and then we have support activities, which are meant to facilitate those other activities. So the sequence of the primary activities is extremely important. And we're going to see the sequence over and over and over again in this course. We need to make sure we understand what it is that we do at what point in time and why we're doing it for a particular activity, a particular task. So the first step is going to be our inbound logistics. This is receiving, storing, and distributing materials and in-process inventory, all right? Obviously, we can't do any operations if we don't have the materials or we don't have the resources to do them. So inbound logistics is the acquisition of resources. Next are going to be our operations. This is where we transform inputs into finished goods and services. This is, again, similar to what you learned in 221 or any of your other manufacturing-based classes. We actually transform inputs into outputs. Now, keep in mind, this is a generalization. When you did this back in 221, you were like, okay, take wood, turn it into a chair. And that's an accurate representation. but it's not something that every organization does. If you go to work for an accounting firm or a law firm or a services firm, they're not taking wood and transforming it into a chair. They're taking data and transforming it into information and trying to use that information for value for their customers. So it's the same process. It's just going to be a different resource that's used as the input. Then we have the outbound logistics. This is warehousing and distributing the finished goods to the customers. Again, this can actually apply to services as well if we deliver service information to customers. We also have the importance of marketing, sales, identify and attract potential customers, firms, goods, and services, which is going to be next to the sequence. Who is our market for this particular item and how can we sell that to them? Now, I can't stress enough how much my philosophy about marketing changed coming here to Truman State. It was very interesting because when I was at the University of Oklahoma getting my undergraduate degree, that was one of those areas. Marketing was that business major that everybody who didn't want to do an actual business major went into. Okay. And so but I'm not trying to insult you for a marketing major. I have massive respect for marketing majors. I came to Truman State and found out, wow, marketing majors actually have to do work here. They have to actually put in the effort and learn what the context of this is. We've actually got a really good marketing program here, but yeah. So marketing, we can't actually be in business if we don't have attractive markets for our goods and services. So we need to be able to identify those and understand what's necessary there. Good question.
Yeah. Why does marketing come after outbound logistics?
So sequentially speaking, we have to have a product that we have to sell before we can even market it. Now, we could say that if we know what our outbound is going to be, we know what the result is going to be, we could market that in advance. But for technically speaking, the only reason that's going to be sequential in the order is that we need to have something to sell before we can actually sell it. Okay. So a little bit like saying, what is my talent? My talent is speaking hyperbole. That's talking about me specifically. Okay. I'd have to go out and identify a market for hyperbole. And it turns out Truman State's a great market for hyperbole. That gets actually, which, yeah, I probably should say hyperbole is probably not a good probably not a good product to be selling. So we're gonna package my hyperbole as accounting information. Anyway, apologize, I got off track there. Finally, we have service. Service provides support to the customers after the sale of goods and services. If you learned about this back in your cost accounting classes or managerial accounting classes, this is an inefficient term, but the simple truth is you do have to have this support service, or do have to have the service to support everything else that occurs ahead of time, because we are imperfect. We're humans. We're not going to get everything right the first time. So it's important to have that service in place. Now, with all that being said, this is a sequential system that we need to note. These are our primary activities. What are our support activities that give value to this? So first of all, procurement. We actually have to have inputs such as raw materials, supplies, and equipment. Now, again, that is not limited to tangible items. We could also talk about intangible items. We would need data if we're providing information. So this can actually be applicable in that regard. Information technology is going to represent all technologies used to support value creating activities, both current for sales and future, which are going to be research and development. Then we have human resource management, obviously recruiting, hiring, and training, and compensating employees. And then probably one of the ones that gets overlooked, but is still important to note, is infrastructure. Finding the key areas of support for the firm, so CEO, finance, accounting, legal, all those are going to be big picture support for the organization. Now, it's important to note here that these are kind of sequenced in a diagram that makes it look nice. Procurement falls here, information technology, it falls in those spaces, but those are not meant to support the nearby boxes. When we talk about support activities, all of these support activities can support any one of these primary activities. So it's important to note that these are kind of across the organization as a whole and not meant to be isolated to whatever's closest to them. I will say procurement is probably most closely relevant to inbound logistics, but you can have procurement in any part of the organization. All right, so hopefully that wasn't too much. Again, I think that's fairly intuitive. You probably have seen diagrams like this. Maybe terminology is a little bit different, but for the most part, this is fairly intuitively sensible. And this is important to note because we have to have these elements within an accounting information system in order to be able to operate. Now, the term I used a little bit earlier, you heard me talk about NetSuite, and I used the term AIS, and then I said ERP. Has anybody heard the term ERP before in their classes? So ERP is enterprise resource planning, okay? Basically, when we talk about the system as a whole for the operations and organization, that is termed as an ERP. And more accurately, I would say NetSuite is an ERP system. Why do I say AIS? It's because the AIS is usually a foundation of an ERP system. In order to be able to deliver information throughout the system as a whole for other areas and other processes, we need accounting, all right? And that makes perfect sense because accounting is an aggregation of financial information. Remember, you heard accounting is a language of business. Well, what do accountants do? They aggregate the details that are necessary to be able to make business decisions in other areas. Finance uses accounting, marketing uses accounting, management uses accounting. So the accounting information system is going to be created first, and the ERP will be built on that. And we're going to actually be looking at the accounting aspects of the ERP system when we get to NetSuite, but we're also going to be talking about how does this facilitate the transactions in other areas? How does this facilitate the shipment of goods and services? How does this facilitate the collection of resources? How does it facilitate all the things that we need? So items that relate to accounting but go beyond the scope of accounting. And so when we talk about an ERP system, it's going to be talking about mostly we're going to be talking about purchase orders, sales orders, vendors, customers, inventory, and employees. All of these systems reflect back to the areas that are going to be important here. We're going to divide these according to process areas. We're going to have 3 primary process areas in this particular course. We're going to be talking about purchases, revenues, and inventory management. That being said, within a true organization, it goes well beyond the scope of just 3 process areas. The only reason that we limit it to 3 process areas is because it gets really, really rambunctious if you start talking about all the possible process areas. You could talk about investment management, financial management, cash flow management. You can talk about all the different areas that relate to any operational organization. It probably gets to multiples of 10 about the different type of process areas. So we're going to keep it to our primary process areas, which will be revenues, purchases, and then we're going to talk about inventory management because that links the 2. All right. The ERP system can take an order from a customer, fill the order, ship it, and create an invoice to bill the customer. So an example of the use might be checking the customer's credit, checking inventory levels in the warehouse, and determining when an order can be shipped. Now, those last 2 are fairly straightforward. Okay, those last 2 are fairly straightforward. We want to make sure that if we actually take an order, that we can meet the need for that order. It's a little bit awkward if you walk into Taco Bell and says, okay, I'd like a Mexican pizza. And they say, all right, they take your money and they say, oh, we're all out of Mexican pizzas. Anybody had that experience before? Okay, I talk about Taco Bell. They still have Mexican pizzas, right? Okay, it's been a long time since I've eaten at Taco Bell, but yeah, I think they still have Mexican pizzas. So that would be an awkward experience if you walk into Taco Bell and they say, we can't facilitate your order. So that they've got what we have the inventory management system. Also, we want to know when it can actually ship to the customer. If it's shipped in advance, there may be problems. Like if you ship a computer and it's not completely assembled, you're probably going to get a customer very, very angry on the other end and says, what am I supposed to do with this box of nuts and bolts? So all of these are really important and very odd for very obvious reasons. But this thing about checking customers' credit, why is that listed here? Is credit checking really necessary? And the answer is, what is something that we know about accounting? Something you learned about 220. Are we operating on cash basis or is it something called accrual basis? So when you learned accounting in 220, do we say this is a cash basis accounting or is it accrual based accounting? Accrual basis, okay? Remember, your expenses and revenues don't necessarily occur at the same time, and they don't necessarily occur when cash flows take place, okay? So accrual basis accounting. So that the nature of accrual based accounting basically tells us that we can extend credit to a customer. We can say, all right, you can buy something from us and you'll pay us later. Does there exist a possibility that they may not pay us ever? We just say, okay, buy from us now, pay for us later. If we just did that for everybody, then we probably have a lot of people say, all right, I got something for free. I'm moving off and moving on to another client, all right? That's why we check customers' credit. We want to make sure that if we're extending it to creditworthy people who actually pay us back. It really defeats the point of a receivable if you never collect that receivable. It's like having a whole bunch of income and then no cash associated with income. A lot of businesses have had massive amounts of income, but if they can't collect the cash associated with income, then it's certainly problematic. This is something that is a step that we need to actually identify in our process. Remember those things called internal controls we talked about a little while ago? This is a control, checking a customer credit to make sure they're creditworthy. Everyone through the entire process can view and update the information. Again, this is restricted to the areas of information that they have access to within the ERP. We'll talk more about that as we actually get to the ERP examples. So let's talk really quickly about some areas that you probably have some familiarity with, but how they relate to the AIS. So AIS and supply chain. So supply chain management refers to the managing flows of materials, information, payments, and services from suppliers all the way to the customer. Okay. Supply chain management, very, very heavily focused on the basically the inputs that we need to generate outputs, and usually these are the tangible items, the goods that are going to be created. So if we don't have the necessary raw materials, we can't create the necessary finished goods inventory. Proper AIS design and implementation can make supply chains more efficient. We can determine the levels of inventory in stock and the amounts to be ordered, and determine the timing to transfer inventory. So this relates a little bit to that management accounting, but a little bit more to the actual whole supply chain. Talk about the vendors, the people who actually supply the goods and services, and the customers who are buying the goods and services and knowing what the timing looks like for all the parties involved in the transition of those items. Additionally, we have customer relationship management, okay? This is going to be very focused on our revenue stream. Customer relationships management software is used to manage your interaction with the customers. How can AIS help in that? Can track customer purchases, ensure customer satisfaction, and verify product placement. Making sure the customers are getting what they want when they want it, and they're happy with their purchases. As we know, customers who like what they buy are likely to buy again. If you go to a restaurant and really don't enjoy your meal, you're probably not going to go back to that restaurant, right? So ensuring that there's a good customer experience is something that's really important. An accounting information system should facilitate that. They should know what is a customer buying and will they buy it again if we promote that to them. Now, this is all well and good, and this is something that's probably repeated in other courses before, but how does this relate to what we're going to be talking about in this course? And the answer is that all of these things can be characterized to information that's presented in a very simple way. Everybody look at this. Let's kind of see what this looks like. Does anyone remember the income statement from accounting classes? Starts out the revenues, less cost of goods sold, getting gross margin. We can also subtract out the SG&A expense and the interest expense to come up with the net income. What do these all represent? And these could actually all represent items that we've talked about so far in this lecture. So revenues. Who is responsible for revenues for the most part? Are we going to say customers or vendors? Do you usually sell to vendors? Probably not. You sell to customers. So customers are going to be very focused on generating revenues. Therefore, we need to make sure that we have proper customer relationships management techniques in place to maximize revenue generation. On the other hand, who do we usually buy from, customers or vendors? Vendors. So supply chain management can actually manage our cost of goods sold and make sure that it's at a reasonable amount. And if there's opportunities to reduce that, then we could do so. We would like to maximize revenues and minimize cost of goods sold. If we do that, we can actually improve our income and the output. And the same goes true if we move forward. Gross margin actually is a combination of those. Selling general administration expense, that's more of an ERP mechanism. But interest expense can actually affect supply chain management. And net income can be affected by all of these. Supply chain management, customer resource management, and management of the enterprise resources as well. So ultimately, this does flow into a tangible output that we're very familiar with already. It's a matter of seeing the pieces that go into that. All right, that does it for today. We will have our first our Excel quiz and Fun with AIS on Friday. I will see you all then.